Google just continues to post record-breaking quarter after quarter. In today's video, we will cover all of the hype that came with Google's most recent earnings report. We will cover Google's insane 20-for-1 stock split and talk about why there might be some ulterior motives for them doing the stock split. I'm going to be buying a lot more shares of Google here in the short-term future. I feel like Google is just a cheat code in the stock market. This company can just print money at will, it seems like. Now, I've already made a video going into much more detail on how exactly Google does make its money. I'll link that at the end of this video, as the info is still very much relevant. Just make sure you remember to hit that like button, say no to censorship. I know it's very ironic I'm saying that about a video on Google, on a Google platform, and just make sure you're subscribed to the channel as well. Google shattered its earnings expectations for the quarter, bringing in $3 billion more than that was forecasted at $75 billion. So for this past fiscal year, Google brought in $258 billion in revenue. That is a 41% year-over-year increase. And this was mostly from Google search ads, bringing in $150 billion, but they also have a few more moneymakers in YouTube ads, their cloud services, and of course they sell ads on third-party websites. Really, owning Google is like owning digital real estate. It's its own internet ETF. What's great to see as an investor is that this trend line just keeps rising exponentially. It's like every year they find a way to outdo themselves from the year prior. I mean, just 5 years ago, they were bringing in just around $100 to $110 billion a year, and now they're bringing in nearly $260 billion, easily doubling for such a large company. Companies would literally kill for these type of results, and Google just makes it look easy. Its gross profit and operating income just continue to go up every year as well, reaching $146 billion in gross profit and $79 billion in operating income this past year. This is the amount of money that Google gets to keep after accounting for its cost of goods sold. That gives us a ridiculous gross margin of nearly 60%. It just shows the incredible economic moat that Google has. I mean, what else are we going to use? Bing? Cash flow numbers this past year reached over $90 billion. That means that the company has no problems bringing in cash into its business, and they just continue to grow it. This is why when we see that Google is sitting on a cash pile of $140 billion, that means there's endless opportunities of what they can do with this money. Google actually bought back $50 billion of their own stock in 2021. I mean, they certainly had the money to do so. Google is also investing in its own employees. They added nearly 6,500 people to their headcount this past quarter, mostly for technical roles. Another low-key advantage Google has is that they can attract the best and brightest talent, because literally everyone wants to work for Google. They want to have that Google work experience on their resume. Other things that Google can possibly do with all this extra cash is invest more in their existing segments, whether that be their Pixel smartphones. They could continue to work on their cloud computing business. Google's autonomous cars can definitely revolutionize the industry in a couple years. Or Google can go the Microsoft route and just buy an existing company to keep growing its business. And yes, I am fully aware as of today, Google does not pay a dividend, but I do believe they will sooner than later eventually start paying one. I also think Congress will eventually break up big tech companies, and I think possibly paying a dividend and not sitting on such large piles of cash as Google is currently doing, that can definitely help mitigate some of that risk. Google is a $2 trillion company. I just cannot see this company slowing down, but one thing that will be coming down is the share price after this 20-for-1 stock split that Google finally announced. I think a lot of us saw this coming. Obviously, there's no fundamental changes to Google. The stock split will not impact any of their actual financials. But I think we can all agree that even with fractional shares trading that exists today, it is much cooler to say that you own, say, 25 shares of Google rather than saying you own 1.34985 exclamation mark. Also, you can never understand the human brain's illogical decision making. We've seen this in the past with other companies when they've had run-ups after announcing stock splits. We saw this with Apple, Tesla, Nvidia, just to name a few. The stock split isn't actually expected to take place until mid-July, so we actually have quite some time before this actually takes effect. But I did want to mention two areas where the stock split will have considerable impacts. The first one would be options trading. I just made a video on why I think doing covered calls is actually maybe even better than doing dividends. But if you wanted to do that with Google's current day prices, good luck with that, because you would have to have around $300,000 just laying around. Once the stock split happens, an investor might be able to do options trading with Google for somewhere in the ballpark of around $15,000. That's a lot more attainable for the average investor. Tech companies often pay pretty good premiums, so I'm actually really excited for this. But I think the real reason why Google decided to do this stock split was so that they can be included on the Dow Jones 30. This is one of the most watched indexes in the world, and it is filled with blue chip companies, and it is used to get an overall general gauge on how the market is doing. So the way the Dow is calculated is a lot different than other market indexes. They actually go based off the share price and not necessarily the market capitalization that almost every other index follows. So those companies who have a higher share price, they actually have a larger weight within the index. This is actually the exact reason why Amazon and Google have never been added to the Dow. With their large share prices, they would just have too much of an impact on the day-to-day fluctuations. I personally think they will drop Intel to make room for Google, but some in the market believe it could be IBM. Being added to the Dow would be a huge benefit for a company, as many ETFs and mutual funds, they just passively buy companies in the Dow. Now that's certainly going to cause the share price to go up. So overall, guys, I'm just a big fan of the stock split. This has been another amazing year for Google. I would never buy a company just because of a stock split, but I think big things are going to continue to be on the horizon for Google. Let me know in the comments if you agree with me. Do you also think that Amazon will follow suit with a stock split later this year? Now these videos, they do take a lot of time for me to research and edit. Just make sure you hit that like button for the algorithm before you leave. My videos are always found in podcast form under the Collect Cash podcast name, and this includes being found on Spotify. I have no problems keeping it on that platform. And I will buy, stash, and collect cash you later.